Hi guys, good evening. I hope you're having a great weekend. Let's do the weekly outlook for gold and euro dollar. We'll start with gold, we'll go to the weekly time frame, then we'll go to the H4 time frame, and then we'll do a similar exercise for euro dollar, where we'll go to the weekly time frame and then we'll go to the H4 time frame. On gold, on the weekly time frame, we know that our swing is bullish, our internal is bullish. We had these weekly favorites, which is the internal range liquidity, which price seems to have completely mitigated and has given a bullish initiation. Yes, I understand that it has been very sideways for the last multiple weeks, but we should know that the objective of the swing pullback may have been completed since the internal range liquidity is taken out. Now we know that if the internal range liquidity has been taken out, what is the next drawn liquidity, which is this buy side liquidity, which are these buy sell stops, could be the next drawn liquidity. On H4, the perspective is that the immediate order flow is bullish. We have these H4 fair value gaps, which are also towards the discount area. We might want to wait for either of these H4 FVGs to get mitigated during either of our session, London or New York, depending on the scenario. And then we can play a pullback towards the H4 stops, which would also be aligned with the weekly time frame. This is what gold outlook looks like. Weekly bullish. We've mitigated the internal range liquidity. Now the target is external range liquidity. On H4, similarly, our immediate order flow is bullish, where we have this internal liquidity to be taken out. Once we take out this, then we can play the internal to external range liquidity concept. This is what XAU USD tells us. On euro dollar, the swing is bullish, internal is also bullish. Currently, we have multiple FVGs. We have one FVGs right at the top, and then we have two FVGs here. Now, price is currently mitigating this FVG. If we need to see higher prices, this FVG needs to clearly hold. In a scenario where if this FVG fails to hold, then this FVGs become the next drawn liquidity, because then where is the imbalance? Why would price go up if this FVG is disrespected? If this FVG is disrespected, we might see price move towards these weekly fair value gaps. This is what the weekly time frame is telling us. On H4 time frame, yes, until this weekly time frame is nullified, it is disrespected, we cannot assume that it will get disrespected. So if you see very beautifully on H4 time frame, the sell side liquidity, these equal lows have been taken out at the weekly fair value gap, and then there's a buy side liquidity which has been engineered. So SSLQ taken out, BSLQ has been engineered already for our future target. We just need to wait for this H4 FVG to get mitigated so that we can try for taking out this BSLQ and we can take a long trade from this particular H4 FVG. Euro dollar is fairly simple. Weekly time frame both bullish. We are mitigating one of the weekly fair value gaps, and on this weekly fair value gap we have already taken out the sell side liquidity. On H4 time frame, these equal lows, and we have a BSLQ which is engineered. We just need to look for a long opportunity at this H4 FVG. This is the outlook for euro dollar and gold. I hope you understood. If you have any questions or comments, please drop down in the comment section and we have to clarify. And have a wonderful week ahead. Thank you.